Good morning, everybody. It is Monday, January 13th, and we are going to start our prep for the beginning of OPEX week. We do have some big catalysts coming this week with CPI and PPI. Are you ready for those? And do you understand where to look to see if the insurance is coming in for the market? That's what we're going to look at today as we dive into our prep. Just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. Now, when we look at the market here, we have been going down since we failed our line in the sand. Our line in the sand was 60.34 on Tuesday. And once that failed, that signals to us that we can see more downside. Again, the line in the sand is the most important level that we pay attention to because that is what affects the actual business cycles in the market. The market makers, the large central banks that are playing market makers like Goldman and Chase. This is what they are using to determine their risk, and that's where we pay attention. So that sits way above us today at 59.72, which gives us plenty of room if the market decides to go back to neutral ahead of CPI, which is what we're going to watch for. As we've been coming down, we have been outside of, so Friday we were outside of Thursday's range, and we made a nice trend down day right to our 58.51 lower level whenever with students. And now as we come into Globex here, we've gone down again right to where the election started. So you can look back at your charts and on the cash index back to November, beginning of November, that first week. And that's what we've come right down to is where the election position was. And that is going to be our big area today. Our major levels that we're going to watch as we come into this are going to be 57.92 and 57.80 on the downside if we break that poor low from Globex. Now, on our flows side of the market, commercials are still short, and we'll get new COT data today to see if they've covered any into last week. But it's more likely that when we look at next week's positioning, with this being OPEX, that we see more of a shift after the inauguration. And market makers, again, are in risk absorbing mode, which means we're looking for wider ranges and higher volatility. So we are pricing in about an 81 to 92 point range today based on the VIX. And that's what the CBOE has for our expected range. In terms of positioning, our insurance funds are about 65% invested, and our fund managers are about the same, about 2/3 invested. So there is cash on the sidelines once the market finds its bottom. And so today our systematics are buyers between 58.53 and 58.82. Really, we don't get any significant selling until 23. That's where we go from about 700 million, which isn't that much in terms of the market, to about 5 billion. That will be a big shift. So we're going to watch that at the open to see if that comes in and gets defended. Now, our market makers are getting near their max risk, which is down at 57.80 and 57.50 if the market continues, but that's where they'll be putting themselves at max exposure, and that's what we're going to look for. That's when we would look for a reversal in the markets as they would look to de-risk their books. And if we look at the VIX today, our big levels we're going to pay attention to on the futures is 2005, 2135, and 1970. And if you know how to correlate those and what we're looking for, then bring that through to your trading today, as it is still giving good signals and has given very good signals the last few weeks. In terms of our levels today, so we're looking for rotational price action between 58.40 and 59.09. And our pivot here is at 58.65, right here where Friday's point of control is. If we stay below 58.40, then our pivot is 58.05, which is around our Globex low and our election lows. And then our targets are 57.92 and 57.80. And if the market really begins to sell off, then 57.50 is our max low expectation. If the market decides to rally, which again, remember, in certain environments, the market does see wider moves, and you'll hear the comment that bear markets have the most up days in the market's history, the strongest days are during bear markets. We can get a little more specific with that and know that that's all based on business environment, which is when we are in risk absorbing. So if the market decides to get more volatile to the upside, 59.09 is our upper rotational band, which would bring in 59.52 and 59.68. We do see those 1% plus moves when we are in risk absorbing mode, and that's what we're going to watch for in the coming days and weeks is higher volatility on both the upside and the downside. Remember that OPEX is Friday. It's the first one of the year, and we have a 3-day weekend. So this will be a big OPEX, and then risk falls off next week as we enter earnings season for large cap tech and mega cap tech. On to the NQ today. We are looking again for rotational price action 20,845 up to 21,155 with our pivot at 20. We'll roughly say 21,000. It's 29,992 area. And you can see that this large position has been holding us up in Globex. And again, if we stay under 20,836 below our rotational, we're going to look for our pivot at 2720 with a lower target at 20,628. If we get back inside here, we can look for longs up to that pivot and up to our upper rotational band at 21,150. For the NQ, again, your biggest level is going to be 21,000. If we stay under 2840, we want to be more short biased. So just like on our ES, if we can't get inside of our rotational zone, then we're going to look more short biased. Otherwise, getting back in there after this Globex flush will signal stronger longs. And if you know what to look for when market makers are in this risk absorbing mode, then you can follow the flows very easily. So with that, guys, if you're still confused on who's in the market, when they're in the market, and what their agenda is, then check out our courses or our Discord offerings where we can get into that a little bit with you. Otherwise, have a great day and make sure to control your risk and stay safe trading out there.